Hello traders, the title of the video is a reluctant Elliott wave trader puts Google stock on the spot. Alright, I'm a bit reluctant to analyze Google stock for personal reason, alright, but today a trader did ask me to analyze Google stock, and I did tell that trader that I'm not willing to do that, okay? But what I want to do, I want to quickly go through it so you may have a bit of idea what is happening here, all right? So let's get started, all right? Counting wave, if I have enough data for this stock, I hope so. So this is the first wave of a higher degree, all right? Now we have a second wave of a higher degree in the shape of W, X, Y. All right, so this is W in the form of 1, 2, 3, X. All right, and then the Y mono wave of that WXY wave is a triangle here, if you agree. So between the two black vertical lines, we have a W, X, Y, right, forming the second wave of a higher degree. Then we have that we are now in the third wave of a higher degree right here, and this is the first mono wave of that third wave of a higher degree, a second mono wave of that third wave of a higher degree, and the third mono wave of that third wave of a higher degree, and the fourth mono wave, okay, of the third wave of a higher degree. And now we are now in the fifth wave, or a fifth mono wave of the third wave of a higher degree. Our forecast is that after that we'll have a fourth wave of a higher degree and, okay, the fifth wave of a higher degree. With the information that we have today, that's all we can say. If the price begins to print something differently, we'll come back again and review our wave count, all right? So if we go also to the yearly chart, stay with me please, because this video is for educational purposes to help traders to improve their wave count. So you see here on the yearly chart, it looks like a first wave. You can see this section here looks like a triangle almost. This is the second wave of a higher degree. We are definitely in the third wave of a higher degree. All right, but we have a bit of shadow here on the yearly chart. That candlestick bar is not yet closed. Is it going to become bearish completely? If it comes down all the way here, then we know that we have to review our wave count, all right? So if I go back again to the monthly chart very fast, all right, because I don't want this video to be too long, there will be some disagreement because sometimes you may have 2 or 4 traders that will count wave, and this one will say this one will say that. But the number one, okay, separation between two Elliott wave traders is that have you make excellent trading decisions. The next thing is that we can use the violation of Elliott wave rules to separate two traders. So one trader may say, this is my wave count. Another trader may say, this is my wave count. And then we look at both wave count. We say, all right, your wave count is wrong. They may say, why? Because there is an Elliott wave violation. If there is an Elliott wave violation, we can look at a trader in the eye and tell that trader that your wave count is wrong. And there is nothing that trader can do about that. All right? Okay. Now, another thing that we can use to separate two traders is that two traders can count wave. Two Elliott wave traders could count wave. All right? So both count wave. Everybody is very confident that my wave count is good. Your wave count is rubbish. Now, the bottom line, who has made more money, who have made successful trade, right? Because the bottom line is to adhere to the market pattern and use a top-down trading method to trade it. After the wave count is completed and everybody is happy or satisfied with their wave count, everybody has validated their wave count, all right? Now, can you make a decision? Can you time the market? Can you forecast the market? And not only forecast accurately, be able to take part of it and get something out of the market, okay? This is why we are recording this tutorial today, to help traders to improve their decision so they may become more practical Elliott wave trade, because we are talking about Elliott wave theory. There are a lot of Elliott wave theorists out there who do not apply the Elliott wave theory in a practical fashion, talking about technical trading in the financial market. All right. So another trader may say, George, I disagree with your wave count. This is the first wave of a higher degree. All right. And they may say, George, this is the second wave of a higher degree. So for that trader, he may say, this is the second wave of a higher degree. Now, look carefully. And that trader may say, George, the third wave in fact has started here. He may say, first minor wave of the third wave, are you with me? Second minor wave of that third wave is a triangle. All right. All right. And from here all the way up there, that's the third minor wave of the third wave, followed by, then we will be expecting not the real fourth wave of a higher degree, as George was saying, but instead, like we have done for Apple stock, you remember that, we will have the fourth minor wave of the third wave of a higher degree, and then the fifth minor wave of the third wave of a higher, my apologies for today, then we will have the fourth minor wave of the third wave, and then we'll have the fifth minor wave of the third wave of a higher degree. And then after that, we'll have the real fourth wave, followed by the real fifth wave. Now, you understand, we talk about Elliott wave validation, going into the mind of other traders to see. So I'm satisfied with my wave count, but I also know that other traders may count their wave differently. But look at the, can you see any difference, a big difference, a significant difference between my wave count and the one that I'm just talking about, all right? So there's no big difference, all right? So that person is calling this session a correction, all right? He's not calling this X, all right? He's calling it the first wave, all right? But he's expecting here the fourth minor wave of the third wave. I'm expecting the real fourth wave. So he's expecting the price here to go down. I'm expecting also the price to go down here, all right? So he's expecting the price to go up here, forming the fifth minor wave of the third wave. I'm expecting the price to go up here, forming the real fifth wave. So there's no significant disagreement, no significant. So he's prepared to sell in this session. I'm doing the same thing. I'm prepared to buy in this session. He will be doing the same thing. And when he's here, he'll be saying, all right, George, this is the end of the third wave. I'm expecting the fourth wave. So here he'll be expecting the price to go down. And I will be expecting the beginning of the correction, which means the price will be going down. All right? So this is a short tutorial. So you can see I put in a bracket 2 sections here. This is the first minor wave. Okay, compare your wave count to mine. All right, and stick to the one that you like. That's what I would say to you. All right, but at the end of the day, all right, draw your channel. All right, use market geometry, implement a top-down trading method without, all right, okay. Cutting corners, so to speak, all right? So for Google stock, all right, talking about long term, this stock can go into the 1,400 zone, all right? That's, okay, the projection into the long term for Google stock. The price now at, all right, this here today is at 1164. 1,164. That's where the price is now. So okay, expectation move up. All right. If you have any question or suggestion, please put in the comment section. In due course, I will be recording another video to answer your specific question. Look at here how the moving average 20 was helping here. Okay. Second minor wave. Look at that. This one also. Fourth minor wave. The price and then the internal wave or the third minor wave of the third minor wave of the third wave. Are you confused? Also subdivided into 5 minor wave. We have double minor wave. All right, here this is testing the moving average 20 nicely, because you can see stock. You can see that Google stock is a bullish cow because it's not breaking below the moving average 20 on the monthly chart. Can you see that? People are buying on the edge of the moving average 20. They don't want it to break below it. All right. So it's just going nicely up. Now we are coming to the end of the third wave. We expect a fourth wave, bringing the price in a zone normal condition. All right, 919. Okay, and then long-term projection 1,400. At the end of the day, remember this, my friend. If one is trading Google stock, one must trade first. The S&P 500, the major indices, what are they telling us? The market sentiment, the market environment, and most importantly, the economy news relating to Google stock. All right, the future is looking bright for Google stock. All right, the giant of the technology sector. So though I was reluctant, I'm a reluctant Elliott trader today, because in fact I didn't want to do it. Then I look at the chart and I say, well, it's not too bad. All right, we can talk about it without too much blah, 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 blah. So this video was recorded today because a trader with a difficult name, PMMNS, all right, you know what I mean, himself, he understood. It's all letters or characters, so that's why he has asked me to record this video. Was a reluctant Elliott trader. Now I've finally done it because it's not too bad. If you find this video useful, please let us know by sticking up your beautiful thumbs up. If you dislike it, all right, be sure to mark it down. All right. If you think that this is an essential tutorial that can help other Elliott traders, feel free to share with your friend on Google+, on Twitter, and also on Facebook. All right. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about a reluctant Elliott trader. Put a Google stock on the spot. Happy trading to you all, and I will speak to you soon. Thank you for watching.